Hello and welcome back to the Import-Export Hub channel, everybody. Boring Bogdan here, your host for the next couple of minutes. Happy New Year to all of you, by the way. I hope that 2023 will surprise you, of course, in a positive way. And guys, without making this intro too long, you know that I hate it. Let's start this year slowly with a relatively easy quiz question about apples, and goes like this. So who was the largest exporter of fresh apples in terms of value in 2021? And options here are the United States, Italy, or China. And guys, the correct answer is China, who in 2021 exported some $1.4 billion worth of fresh apples. It was followed by Italy, while the United States were the third largest exporter with almost $917 million. And now that you know this really useful piece of information, let's take a look at the Freightos index and how it behaved in the last couple of weeks. We have here the latest data coming from the 6th of January, so just 4 days ago, and we have a general index of roughly $2,000, 3% drop from the previous week, with big movers here involving North America West Coast to China sub-index was up 10%, while the sub-index connecting North Europe to China fell 18%, bringing the absolute value to $349. Moving now to the main head holes here for the Trans-Pacific sub-indexes, things are still volatile. The much expected pre-Chinese New Year volumes didn't materialize as expected, so the freights are still under a little bit of pressure, even though we have here a 1% increase on the sub-index connecting China to North America West Coast. Now, moving to the cross-Suez head holes, things are more contained in terms of price volatility. And I don't know if this is related to the blank sailings and the capacity remover, so the supply side, or because of more discipline in terms of inventory management coming from the demand side. But anyways, it seems that freights are keeping their grounds here, and we have $2,712 for the sub-index connecting China to North Europe and $4,225 for the sub-index connecting China to the Mediterranean, which is 9% up week on week. But let's face it, overall, I think it's safe to say and admit it, with lower levels of congestion, fewer delays, and falling freight rates, the bargaining power of shippers has increased dramatically. And the smart ones will not forget the take it or leave it approach that some carriers had in the last 2 years when renegotiating their contracts. Anyhow, things right now are boring in terms of freight volatility, if you ask me, which is a good thing, don't get me wrong, and I don't know, until news about new orders cancellation won't come, I'm afraid that we will stay on this plateau. Until then, guys, I will cover just one news before I finish this video, and I can safely say it's also my prediction, if you want, for 2023, which involves Turkey, and I will make a reference to other emerging manufacturing hubs as well, don't worry. But this particular news involves Turkey, as it seems that Turkey's exports hit a record in 2022 with some $254 billion worth of exports, which is the highest level ever recorded. Those towards Europe in particular increased with 12%, while some 10,000 companies have completed their first export in 2022 alone. And I've prepared here also an Excel file with Turkey's exports for the first 9 months of 2022 compared with those of 2021. And it seems that multinationals with manufacturing bases in Turkey already ramped up their production. And remember, it's not just Turkey's exporters taken in these figures, with big absolute changes throughout all the 9 months. And I have also a chart here with the top 15 chapters in terms of performance, in terms of export volumes for September 2022, and we see here that chapter 87 and 88, 84 dominated. We have also electrical machinery chapter as well, but there are others like, I don't know, plastics, apparel, or rubber with very good figures, to name just a few. So definitely these disruptions have helped Turkey maintaining and consolidating, if you want, its competitive advantage in terms of nearshoring strategies coming from the European companies mostly. A thing that I've said it throughout 2022, and the same goes true for also Egypt and Morocco. While on the international scale, global scale, if you want, I think that we will see big foreign direct investments pouring into Mexico, India, Vietnam, Thailand, the Philippines, or Indonesia, as global players lay out, or I don't know, will ramp up the China Plus One strategies. Also, I think that the role of the United Arab Emirates as a regional or continental trading hub will increase as well. They have a very good long-term strategy, and also the money with it to support this strategy. My guess is that 2023 will be another year in which supply chains will be strategically reconfigured, very close aligned with the current geopolitical trends. With a greater emphasis, as I've said, on China Plus One approach. Regarding China, I think that China's policy, both at the local and international level, will weigh a lot on its future growth and how the Western countries will perceive China, either as a partner or as a threat. We will have learned to live with both COVID variants and the proxy war in Ukraine, while in terms of economic growth, I think that the majority of G7 countries will manage to revert the inflation trend from 2022 and contain it as, I don't know, fiscal and monetary policies taken a couple of months back finally start kicking into the system. And maybe we could even start talking about GDP expansion in the next couple of months, except maybe for the European Union, where personally I think it will be very hard to find a consensus between 27 individual interests. Anyways, guys, with this being said, welcome to the uncertainties of 2023. Thanks for watching. Don't forget to hit whatever button you like. And as usual, until next time, keep your business safe. Thanks.